This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on July 29th, 2011 at 8:45 in the morning Mountain, 10:45 Eastern Time. Radio show runs on AM 640 in Toronto. My uncle was visiting Toronto from Vancouver. There on business. Heard our radio show. He called me. He was listening to AM 640 Saturday morning at 8. Also, our show runs on 630 CHED in Edmonton, Sunday afternoon at 3 o'clock. If you ever miss a show, you can catch them archived on Harold's website, HESradio.com, HESradio.com. Another crazy week. Politicians, as we tape this show in the United States, continue to fight over the debt ceiling and the budget. Maybe the bigger concern is the United States losing its AAA credit rating. GDP numbers came out in Canada and the United States, underwhelming, to say the least, very weak. Harold, I think these politicians, they don't have a lot of time, and whether August the 2nd is a real deadline or an artificial deadline, they need to get something done. They're playing with fire. We're not a political show, but even the average person can see that they're playing with fire. You had a great recession, a financial crisis, and now they're trying to fix the problems of the last 30 years in basically 2 weeks. I don't see how it works. They need to do probably a short-term fix, get them past the next election, and let the American people decide exactly what plan they want to buy into, the Democratic or Republican plan. But a lot of financial landmines out there. Those in hard assets, as we have advocated for a long time, those in hard assets have done very, very well.
You better believe it, and that is going to continue because, again, these problems just aren't going away. You know, it was a good week, really a week of consolidation because, again, there was a lot of news in the markets, obviously, and the markets do respond to this news, but basically gold is up $13.10 as we're taping the show on Friday morning. We're trading as high as $1,633. So even during the summer, when the markets notoriously are slow, the gold market is hitting record highs almost every single week. So it's an amazing situation, but the markets will always tell you what the situation is, and gold and silver are telling you that obviously the world is in terrible financial shape. The silver market is building a very strong base at the $40 level. We're trading at $40.49. We're up 42 cents today. Platinum's had a strong move. We're trading as high as $1,833 in platinum. Palladium is trading at $837. It's up $5 on the day. Now, the fact is that the stock market has fallen over the last week, with the Dow Jones trading right now down another 92 points at 12,147. Again, as these situations continue to unfold, the markets will react accordingly. You've also got a situation where the Canadian stock market, the TSX, is down 170 points. All the markets around the world are on concern right now. They're on alert. It's a very dangerous time. And again, you really have to know what you're doing if you're going to come out of this market doing well. Oil's trading between $96 and $100. I still believe that oil is in a massive bull market, and I still believe that we will see probably close to $120 in oil by the end of the year, and possibly as high as $200 in oil next year, which adds to the inflationary implications of the market. The U.S. dollar is dropping again. The U.S. dollar last week was as high as almost 76 cents. It's now down to 73.90. Now, the U.S. dollar is going to continue to get beaten up and beaten up badly. And again, if they do end up raising the debt ceiling, and again, either electronically transferring or printing another couple trillions of dollars, you can imagine what it's going to do to the U.S. dollar. So again, as the U.S. dollar continues to fall, the metals markets will continue to rise. That's one scenario. The other scenario is inflation. As inflation continues to grow and grow and grow, it's going to push metals substantially higher. That's why we've been advocates of the hard asset market for the last decade, because again, those two factors that I've mentioned are the two major factors that will push gold and silver to record levels that nobody ever dreamed of before. We believe that by the end of this year, and again, it's been an amazing summer. In fact, this very, very seldom happens that in the middle of the summer we get the rallies that we're having in the metals right now. And for gold to be hitting record prices almost every day is just an amazing scenario. Now, we do believe that by the end of the year we will see the dollar continue to fall, and And I do believe, by the way, that they are going to approve the debt ceiling. They have to at this point here. So the bottom line is that they're going to push it right up until the end. They may even extend it for a week or so, but there's absolutely no doubt in my mind that they will raise the debt ceiling. And that's very negative for the U.S. economy. It's very negative for the dollar. It's extremely difficult for interest rates, and again, it's only going to push our markets up substantially higher. You know, most people in the United States are extremely concerned, to say the least. They're confused about this. They're angry about it. You know, the bottom line is that we've been in these markets for a decade now. We knew that similar scenarios were going to happen and unfold as this domino effect continues to fall. But the fact is that most of the listeners to this radio show are sitting in gold and silver and diamonds. And basically, if you're sitting in those markets, you've got to be sleeping very, very well at night. So basically, watch for a strong rally to end the year that, again, if we're getting this rally in gold and silver during the slowest times during the summer, imagine what's going to happen between September and December. So we should get a very strong rally that should take gold to at least 1850. Silver should hit 50 again, which we've already hit. As I've mentioned on several shows, there are buy orders in the futures market above the $50 level. Once the silver market breaks 50 and closes a couple days above that, and these buy orders get hit, you're going to see a quick run to $55 to $60 silver, and if that doesn't happen by the end of this year, it'll happen in the first quarter of next. The bottom line is, before this whole thing is over, we'll probably be looking at silver in the triple digits, meaning anywhere from $150 to $200, and gold could ultimately be a $4,000 or $5,000 metal. The biggest thing coming, everybody's talking about the debt ceiling, but in all honesty, that's really not going to affect the markets in a gigantic way. My feeling is that when they do approve the debt ceiling, either by Congress or as President Obama can just go ahead and do it on his own, it's going to probably relieve the pressure in the markets a little bit. You'll probably see a bit of a rally in the stock market, may go up 200, 300, 400 points. You know, the fact is that the metals could dip slightly, nothing even concerning in any way that would make us sell or even consider selling out any of our positions, because bottom line, you want to be in this market. You don't want to trade the market back and forth. The fact is that if we're going to hit $18.50 gold and $55 or $60 silver short term, you want to be in that market for that move, and then the markets could absolutely take off and skyrocket. The fact is that once gold breaks $18.50, we should see going into the first quarter of next year as high as $2,000 to $2,200 in the gold market. So again, we're not having any problem sleeping at night because we guessed correctly. We made the moves 10 years ago, 5 years ago, 2 years ago that our clients needed to do in order to get through these extremely difficult times. I hear from clients every single day, and again, it's the same feeling. Thank God that we're in the right markets at the right time, because could you imagine what life would be like if we're, chasing the markets or confused, as most investors are at this point. So again, we're only heading into probably the most confusing, dangerous, and difficult times that any of us have ever been through before. My strongest recommendations are to keep our heads about us, not to panic in any way, not to get emotional about these markets. In actual fact, if you're sitting in the hard asset markets in gold, silver, and diamonds, you should be on top of the world right now. And the fact is that 90% of the money is made by 10% of the people, and all Randy and I care about is that our Canadian listeners and clients are in the right markets and able to take advantage of these situations. Again, no matter how bad things may get, if you're in the right marketplace, you're not going to be affected as much as most people by inflation. When oil prices go substantially higher, when fruit prices go substantially higher, and your dollar isn't buying as much as it should be buying, that's inflation. But the fact is that if you've hedged that and offset it by owning hard assets, gold, silver, and diamonds, those assets are rising, and they're rising because of inflation. So in actual fact, what you've done is you've hedged the inflationary markets, and you should be extremely proud of yourself for having the guts and the foresight to do this when most financial advisors would never, ever have recommended going into gold and silver and diamonds. But the fact is that we were 100% correct, and our listeners and clients are doing tremendously well, and that will continue. So again, congratulations. The next 5 years are going to be the greatest 5 years for making money if you're in the right markets. If you're sitting in stocks and paper assets, you're going to have a very, very rough go. In actual fact, you've seen that even with the United States so concerned about the almighty stock markets, where, by the way, most Americans are not in that market. The stock markets are going up because the U.S. dollar is so weak at this point here that it's bringing in foreign money from Europe and Asia. But basically, how could a stock market like the Dow Jones be going up and bullish when the country is falling apart, when it's bankrupt? It makes absolutely no sense to me. But by keeping interest rates extremely low, they're going to keep the stock market basically at a stronger level. But you saw on a week like this, the stock market dropped, about 300 points for the week. Almost 400 points for the week. We've seen the Dow Jones drop from 14,000 all the way down to 6,500 in a short period of time. If you have your money sitting in stocks and paper assets like that, I would be very, very concerned. My strongest recommendation, get out of those markets. Put your money on the sidelines. Get 20-25% of your money sitting in the hard asset market in gold and silver. Get yourself some diamonds. We're going to talk about that in the second half of the show, but we're going to head into the next 5 years, and it's our time to make a ton of money. And if you're sitting in the markets that we've recommended, you're on your way to doing extremely well. Once those markets hit their bottoms, like stocks and bonds and those type of markets, 5-6 years from now, we will have the wherewithal, we'll have the money to go back into these markets and do the right thing. So again, congratulations to all of our listeners that are sitting in the gold and silver and diamond markets at this point. You must be breathing a sigh of relief.
The telephone number to invest in precious metals. There's only one company that Harold recommends. They're a Canadian company. That's who you want to deal with. Worldwide Precious Metals. A Canadian company, been around throughout the entire run of this bull market. They've been through all the ups and downs, and they've been helping their clients, obviously, manage their precious metals investment accounts, maximize profit, minimize the risk. The telephone number to connect with Worldwide Precious Metals, 1-866-623-2002. They have a website. It's wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. We have a free weekly newsletter we send out via email every week. If you'd like to receive it, they will be more than happy to put you on the list and send it to you via email free of charge every week. Lots of good news this week on the silver side of the business. We talked about this last week, but it does bear repeating because there's been a little bit of an update. Citigroup, actually, their analysts said that they expect the silver price to more than double. We mentioned that on the last show. New Edge USA, LLC, expects the gold price to climb to $1,800 per ounce by the end of 2011. They expect the silver price to stage an even bigger rally. They think it will be at $70 per ounce by the spring of 2012. So here we are today, around $40. That would be a $30 move to the upside. Now here we are on the silver side of things with a massive move. On the gold side of things, we would see a nice move from approximately $1,630 up to about $1,800. But obviously you would have more bang for your buck in silver. Also, they say, and this is an update to the story, that silver may test $100. And this is through technical analysis. They say silver may double to $100 an ounce if the current bull market follows similar patterns seen between 1971 and 1980. You can read both of those articles in our newsletter. Another technical an analyst, and she's one of the best in the business, Louise Yamada, says expect $85 silver and tremendous inflation. Her next target for gold, $2,000. And she says that quite easily, the way things are going, we could see $5,200 gold. She really believes that, she said, we hit part of our silver targets at $50. That's what she expected. She believes 65, 80, and 85 over a short period of time. She's obviously very, very bullish on precious metals. John Embreys from Sprout Asset Management came out and he was asked about silver. He was actually interviewed by King World News. Massive shortage of available physical gold and silver. That article you can read in the newsletter. When asked about silver specifically, John said, I think it will be really exciting when it clears $50 because then it will be an absolutely new ground. There is, without